Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
All right, so now I'm in a trending situation. I broke out into a new uptrend or I broke out into a new downtrend. When the breakout happens, if I'm testing the support near the bottom of my channel and I want to take a little bit of a risk, I can buy the calls at the bottom of the channel, or when I'm testing the support at the bottom of the channel, I can buy out of the money calls above the resistance area. Now, that's not a great strategy, believe me, by any stretch of the imagination. But if I have a situation where I can sell puts below there and I want to participate in the upside, I almost have to buy out of the money calls, and I can use the money that I collect from the put spread to have a practically free trade, okay? In our extended learning program, we call it the BFF trade. And our instructor, Eric Ochuknicki, he says, look, if you want to participate in the upside, if there is any, then collect the credits, but also use that to buy yourself some upside. And if it does rally from there, you can do that pretty low expensive. Now, this is another strategy that I personally like to do. If I'm coming into past price resistance during the course of the uptrend, and I happen to be long calls, or if I'm long stock, if I do this in the stock market, which is another place I like to do it, that's the place I want to write a covered call, especially if it's a stock. So if I'm rallying up into an area that has some definite price resistance, I can either buy a put if I'm worried about giving back my money, especially if there's a potential for a 4, 5, or 6% retracement before the trend continues, but better yet, I can sell the upside. I can sell the upside. I can pretty much leg into a spread this way. I can give myself the opportunity that if it does get called away, I can buy the pullback to rejoin the position. So on that case, if I'm coming into past price resistance that has the potential to force some kind of intermediate term trend pullback, I have options to use options to sell upside, and that usually works out pretty good. When I get up to the distribution phase and I'm rallying close to the top, and I'm getting close to the top of that range, now I have the opportunity to buy out of the money puts below the support to where I'm buying time and nothing else. There's no time, there's no intrinsic value. I'm strictly buying time. I'm buying insurance when it should be cheap or cheaper. But if there's a rally near the top where the resistance is, the out of the money puts below should be a reasonable value, and if you're just worried about a stage 4 decline happening, you can protect yourself. Of course, with the increased volatility, if there's decent resistance up there, selling out of the money call credit spreads above there, if it rallies into the resistance, is another strategy. All right, and then when the downtrend happens, once again, there's potential for sharp counter trend rallies, and a lot of times they can be 4, 5, 6, 7%. So as we're selling off, if I come into some past price support, I can always buy some calls, and I can participate a little bit in the upside. But I'd be careful of my puts, because my puts, again, are going to start to lose value on any kind of a counter trend rally. So it's not a bad strategy, but not the greatest strategy, but it's just some ideas if you want to be an active trader in some kind of an up or a down trend. And there are your strategies for when you're bullish on the dollar. You got the opportunity to sell a credit put spread, buy a debit call spread, buy a call, depending on your level of approval. If you're bearish on the dollar, you can sell a credit call spread. You can buy a debit put spread, and of course you can buy a put, depending once again on your level of approval. So, all right, the forecast for the dollar. Well, aside from the fact that my dollar is worth 94%, or probably more than closer to 94% less than it was before, the downtrend in the dollar is being caused by more quantitative easing or the threat of quantitative easing. We talked about quantitative easing last year when it was QE1, and now it's QE2. So we're basically talking about a Federal Reserve that is out of bullets, and the only way they can stimulate the economy is to pretty much print money. And when they print money, they create money from nothing, and they give it to these institutions. And hopefully the institutions will get around to lending it to people, and hopefully there will be demand for people that want to borrow money. Because in the worst case scenario, if the institutions are not stimulating the economy with this increased money, we could have a bout of inflation or worse, hyperinflation. So our new buzzword this year is sterilize. So what happens is Ben Bernanke says, well, I've been sterilizing all of these increases in the money supply. I've been sterilizing by basically buying bonds in the local currency to just affect the fact that we don't want the currency to cause some kind of inflation. But recently the Bank of Japan, when they intervened in the market, they decided not to sterilize and take the money out of the system. They're worried about a strong currency, so they're leaving the supply of yen in the market to make the market eventually see that the yen needs to weaken. Okay? So sterilize. Hopefully they'll continue to sterilize the purchases and the sale of the open market committee, the actions that they're taking. Otherwise, we could really seriously have a situation where there's too many dollars chasing too few goods, and that is the definition of inflation. So the dollar index, which we've all seen over the years, the nice thing is we can trade that dollar index individually, and we can trade it using the ISE FX indexes. So every piece of the dollar index is reflected with the ISE indexes. So you can be more bullish or bearish on certain currencies that are in trending mood, and you can also be trading ranges with the currencies that have support resistance to trade off of. And of course, the euro makes up 57% of the basket, so that's the largest weighting in the basket. But there's still plenty of action, and some of these currencies like the Swedish krona and the Swiss franc have, even though they have small weightings in the basket, they have been trending strongly. Whereas, of course, our Canadian dollar and our British pound have been range-bound, and the yen has been, again, a strong trending currency. So 2009, October, I sat here and said, everybody in the world is bearish on the dollar. That's a contrarian indicator. And, of course, the Federal Reserve's, now it's an official policy that they're trying to depreciate the dollar, and they're going to have to. And they're setting off currency wars all over the world. And hopefully we don't end up with the protectionism that we had with the Great Depression, but it's amazing what's going on. And it's also forcing people to put money into places because there's no yield anyplace else, and that's creating some possible new asset bubbles in commodities and in the stock market. But as Yogi would say, this is deja vu all over again. In October of 2009 and October of 2010, we're now back to the bottom of the trading range. The dollar futures near the origin of the rally from a year ago. And a year ago, we were near the origin of the rally from the previous year. So that means a possible counter-trend rally. Our VIX is already near the year lows. As a matter of fact, it broke through 20, so it's very close to the yearly lows. And everybody's bearish on the dollar and talking it down. But as you know, it is the currency that everybody throws money into in times of fear, and we're just one more debt default from somewhere around the world from the dollar catching the bounce again from the fear trade.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.